Hello and welcome. It is the end of the 26th day of July 2019, and I want to take a look at some of these charts that we see on the economic indicator or economy part here. This one being that of consumer price index for all urban consumers, all items, well, less food and energy. Why do we need to count those? So you can only assume that the rate of ascent is lower than what it should be. Let's take a look at this on a quarterly chart, and pretty much the same thing. So I'm gonna stick with a yearly. Yearly seems to work relatively well. Okay, straight up. And then I have this. It doesn't say any of the less food and stuff, and this goes back to 1948. And I want to do some trend line analyses here. So I've already created a screenshot of this image, and I'm going to use this now with MS Paint. So in the earlier parts, I'm going to start in here. We had this trend line, which obviously got taken out, and it's been no close coming back to that level where we came from ever since. And then let me just do this again one more time. This one here, we retested it, and obviously no longer going at that rate of ascent, but at the time in here, it increased the rate of ascent because you broke an uptrend to the upside. Thus, the higher rate of ascent becomes such like this. Well, first, it did it like this, breaking it to the upside. So it was another one. Let me just go like that. Yeah. And since then, of course, same thing as far as the rate of descent going lower. And then this rate of ascent, of course, was just a few periods. And then we have this one here, but we can see where resistance became support. And really, it didn't even do that good of it, but for the most part, yep. And then this one in here, we got, well, I guess the rate of inflation isn't so bad. Now, of course, they might be doing a little bit of number fixing, but this is all in logarithmic scaling, and it's how the numbers are. But you know what? I thought I'd take these numbers and why don't we look at things like the Dow Jones Industrials? Got a nice little yearly chart here, obviously going straight up, and I want to look at the 3-month chart for this, the quarterly. There we go. So let's take a look and see how has inflation worked a little bit within this. I've already copied and pasted the code. I'm going to divide this, and I got the there we go right there. I'll push enter. And the Dow Jones is going to look, well, still pretty bullish. Got this resistance that became support. And if you've read any of Mike Maloney's books, maybe you've heard in a video before when he talks about the 1970s, and really we could start it from 1965. But it was a silent crash, like mid-60s into the 70s, because well, stock market went sideways, but based on this index, it went from 30 down to 8. And as we see it now, it's actually doing quite well. Let's take a look at gold against the dollar. And we can see it's been doing well too, especially from the 2000 lows. So let's do the same thing. Let's divide it by the same index. And that's what we have in here on the daily chart. Okay, hanging in there, pretty good. Pretty good, but of course, let's take a look at this a little bit further. Let's look at money supply next. As we have that on here, we got the M1 and the M2. Okay, well let's take a look at this on the quarterly to start. Yep, straight up as expected. Data going back to 1976. So how does the Dow Jones look like against the M1? We have to go to all. I can just go DGI divided by M1. It looks a lot different now. It looks more up and down normal movement, not just a straight up. It's obviously an uptrend from the start to the end. We're closer to the high than we are the 1982 lows. How about if we divide it by IC the M2? Is there much of a difference there? And a little in the same-ish kind of area. Let's take a look at gold divided by M1. Ooh, wow, interesting. Yep, down a little bit here. 3-month chart. Let's take a look at this on the daily. Maybe a little bit nicer there. For what should have been thinking monthly, just going shorter term, but we have this high, this low, and it's just starting to get out of it. So how about silver against M1? So do you think silver's cheap right now? It's your opinion. I'm just providing the charts. Now, as far as overall uptrend from where we are here to here, we are closer to where we opened. Or no, throw that back. We are closer to these 2001 lows of 003. Right now we're at 004. It was up to single 026. 26 divided by 4. Well, 4 times 6 is 24. So that'd be 6.5. So this is 6.5 times lower from this. So again, it's your determination on what this means. Because we're dividing. And then what the M1 is, you might say, what, it should be worse than that for whatever reason. Well, that would be more advanced analytics upon the M1 number and its calculation. But I mean, it's obvious that prices increase steadily over time. And then it comes down to the national debt, 22 trillion. I haven't done this yet. It's going to be a bunch of zeros, so I'm going to just look at it for trend. But if we look at DGI divided by national debt, it's again a bunch of zeros are going to come up. But I'll get the movement. Interesting look to it. Well, not bunch, just 1 0. But we want to look at more of a longer term. Interesting. So this is the Dow Jones divided by the national debt, going back to the 1960s. And as the debt increased to that rate, the stock market did not increase at the same rate. It did so, of course, it did have a nice gain from 94 up to 99. But as we've seen, the sell-off in here from 2000 down to 2003, not much of a rally to 2007. So when the stock market went to previous levels, and now we see stock markets at all-time highs, but when we look at this divided by the national debt, it sort of does paint a most interesting picture. I could suppose, just so I could get a base unit number, I could just multiply it by a bunch of numbers. Hopefully that's enough. Yeah, so now we just got a base unit, just whatever. And there we can see the volatility of it, 2000 down to, it's as it is. Now gold doing the same thing. And I'm going to have to multiply this by a bunch more. There we go. We got an index level on it. Okay, so we look at this one. We don't have as much data, of course. But again, we are seeing compared to 2001, it's above this level, and it's, of course, still well below where we are here. And on the silver spectrum, if we take silver divided by national debt, then we get something like this. Oh, way down here. And just for something to do now, let's take a look at and I don't know what I pushed there, but that kind of messed my Firefox screen up a bit, but back now as it is there. And I forget again where my topic was. I know again this is obviously at the most bottom level within the national debt. And even some of those numbers you could say are a little skewed, and this number should be much, much lower than we were back there. And I wouldn't tend to disagree is the best response I think I could give towards such. Yeah, Bitcoin, that's what I want to take a look at. That's what I want to take a look at. BTC USD divided by, and then times a bunch of numbers. Much, much different story here. And we're seeing what I would call excitation on this. Another leg higher. How much higher can this go? Well, I guess we'll see. But as far as volatility, even on this, crushing it. Now, when we look at how the early adoption on cryptocurrency and this fiat debt base, it's to me a fiat empire global collapse, I think is going to happen and is happening. But within hyperinflation, I wouldn't be surprised if this has a good move higher and maybe test over 3,000 in here as a possibility to where it's able to go. As I see it leaving the 18 in here, it was left the after a correctionary mode. This was a correctionary mode here back in 2015. In this case, it went from against the debt itself, it went from 11 to 973. So that's one way of saying that you did if you were to buy at this low and sell at the high. If it's an 80x move, that's how much you overperformed the dollar. And if you can make an 80x return on an investment like this, so dividing it, of course, by as I show and such, that means you're pretty much, you can say buying things at pennies on the dollar. Well, a little over one, yeah, because if you got an 80x return, then it's like 1.2 cents is what it costs per dollar based on that structure kind of gain on a mathematical level. Thank you for tuning in. And of course, again, this is the information I'm presenting. All your bets trades in which you plan on doing is always within your own risk and your own reward. Bye bye.